revenue through sale of petroleum products, lubricants, and other businesses such as provision of solar energy and supplying marketing jet fuels. The company has 258 service stations across the country in strategic locations. Total Ghana PLC is a growing and it's a defensive industry. Defensive means that it's in operation all year round despite the economic fluctuations. So I'll take us through the industrial analysis. The oil and gas industry, specifically the downstream industry, has a key number of players such as Ghana Oil, that is GOIL, then we have Total Petroleum PLC, and we have Shell Oil Company. There are few entries and exits due to the high cost associated with this particular industry. So it's not easy for people to enter and walk out of the industry because of the high cost associated. And it does not fight with threats of substitutes since the industry has none and threats of Total Petroleum Ghana. So first of all, the strength is that Total is a multinational company, and so it's all over the world, and so they are able to connect and work together. And also crude oil is extracted in Ghana, so we have the primary resource here in Ghana, and so it helps in the where we obtain the resources from. The weaknesses are that Total has a bit of competitors. We mentioned early on that it has GOIL and Shell and Zen Limited in the market. And the opportunities, we have larger market share, hence we have a high tendency to expand. The threat in this market is that there are usually fluctuations in oil and gas prices, and also crude oil is quite volatile. And so volatile here means that when you store it, it's able to evaporate. So when they buy fuel or crude oil in very large quantities, the quantity or the volume can reduce, and so it serves as a weakness.
Also, looking at our investment thesis, this is reason why somebody should invest in Total Ghana. So the company's earning per share in the past shows an increase in the growth, a significant growth, which shows that the earnings per share will continue to grow in the future. And also, most traders, Total Ghana had a surge in trading in between August and then October this year with a volume of stocks traded, and then those volume of stocks were valued at 298,405 Ghana cedis. So Total Petroleum Ghana is characterized with a good management, and then this good management is able to help them work harder. This helps them increase their net profit. And as per their chairman's address last year, told us that they had an increase in net profit by 63% in 2020. So forecasting this, we can tell that we can have a similar or even higher margin for the end of this year. Total Ghana does not only provide dividends to its investors, but also since the start of this year, the price has increased from 2 cedis 35 pesos to 5 cedis 52 pesos. This shows that the investors would have capital gains as well as dividends at the end of the year. Prices of Total Ghana is the stocks of Total Ghana is currently cheaper. This means that the intrinsic value has not yet been met. So this means if investors should invest more, they'll be able to gain more capital gains in the future. And this is the earnings per share and how it has surged throughout the period. Looking at the markets or the market price per share, we can see that it shows a steady growth throughout. And right now it's surging at 5.52 Ghana cedis, as from 235 in January. So if an investor should have bought at this time, getting here would have made a large capital gains. Looking at our financial analysis, we are comparing 2020 to 2021, the third quarter. And then from the start, we have revenue growth. We had an increase in 33.08, increase from that is 1,731.802 million to 2,303.869 million, which shows an increase. The cost of sales also increased, but then this cost of sales didn't affect our revenue growth, still giving us a profit before tax of 23%, showing 120.814 million Ghana cedis. The total assets owned by the company also increased by 20.46. This means Total Ghana was able to acquire more assets. And then the owner's equity also increased by the same margin of 20.46. That's a growth from 3.52.813 million to a whooping 424.404 Ghana cedis. The current ratio, that is how fast we are able to shed off our our debt also increased by 5.8, and this is very, very encouraging. Our quick ratio, less than our inventory, we also had a 1.3% increase. Our debt position also increased to 20.6. That's an increase from 4.87 million to 5.88 Ghana cedis. And then with our efficiency, we had an increase from 45 days to 49 days. And then with our average payables too, there was a surge in that as well. When we are looking at our projected annual forecast, we are projecting from 5 years back right down to 5 years forward. And from 5 years back, these are the percentages we had. And for revenue for this year, we are projecting a 2,303,869 Ghana cedis. And then with the use of a revenue growth of 15.88%, we can tell that revenue is going to grow right up into 2026, giving them a terminal value of 5,196,161 Ghana cedis with a percentage of 7.49%. With a net income too, we are anticipating an increase in that as well by a margin of 10.78%. And then with our cash flows, our free cash flows, we have 71,161, and then similar throughout to 2026. With our cash flow margins also standing at an 8.8%, looking at our expected rates or expected return for income, we have for investors, we are standing at a 12%, and this is taking into consideration our WACC, our cost of debt and all of that. So coming to our equity value, we are standing at 908,417 Ghana cedis with these outstanding shares. And then currently, Total Ghana has an intrinsic value of 8.12, but currently selling at 5.52, which means it's undervalued by 2.06. Looking at the catalyst, why are we saying all of this is going to happen in the market? Because Total Ghana has expanded their retail network and they continue to enhance their services. And then their annual quarter-on-quarter shows a positive growth, which means the company's earnings per share will continue to increase, and then the revenue growth is increasing. And as per the chairman's statement, they're having a 63% increase in their net profits. The risk in this economy are increasing interest rates. So when there's an increase in interest rates, it reduces the profits of the company. But when inflation rate is high, it affects us positively since we are able to gain more revenue and then be able to pay dividends at the end of the year. When we look at the industry specific risk, we have competitors such as Ghana Oil, Shell Oil, Zen, among others, which are all in the downstream. Looking at our price, when there are price hikes too, it affects us since buyers may want to withdraw. Looking at geological risks too, it affects our company negatively. So with all of these analysis made and based on the impressive performance of the company for the past 2 years and the healthy projections for the next 5 years, it is obvious that Total Ghana Petroleum is currently undervalued by 32.01%, and I therefore recommend a strong buy for stock investors. Thank you.
Thank you very much.